What is up, you guys? Today we're going to be talking about AMD. I've been covering it on this channel for the past couple of weeks, and we are still sitting here within this squeeze range. We're going to talk about the squeeze, we're going to talk about some price levels you should watch, and I'm going to give you some examples of how I would be trading AMD going into the next couple of days. Once again, the market is up nearly 1%, triple Qs is up 0.6%, Dow Jones is up 0.8%, and AMD is sitting today down about 1.9%. And that trading range that we're going to be talking about today is right here. This is a 1 hour chart of AMD, and you can see that we've been trading very recently since October 7th till right now between the ranges of about $60 and lows of about $56. Now, one thing to note is that as we have been trading within this range and making the same exact supports, the RSI is actually making higher lows, which is a very good sign. This is called a bullish divergence. A bullish divergence occurs when a stock is making lower lows or equal lows while the RSI is making higher lows. Now, of course, this doesn't mean that a stock is going to quickly reverse. It just means that that downward movement, or if it's a bearish divergence and in the upward movement, is starting to weaken. So that is a good sign if you are a bull. One thing to note as well that I'm going to highlight here is going to be this TTM squeeze. We have been squeezing on the Bollinger Bands, which is why the TTM squeeze is firing up, and that is indicative that a big move is going to be happening soon. So normally, the longer that a TTM will squeeze, the bigger the breakout will be, and the breakout will normally last half of that squeeze length. So since we have been squeezing basically since October 11th, which has been the past 7 days, the release of the squeeze, if it were to happen today, would probably last about 3.5 days. Now, squeezes don't have to break out, they can also break down. It just means that a big move is going to be happening soon. And you can see that if we zoom out a little bit, that this price area that we're hugging is right around this point of control, which is where the most amount of volume is within the past 20 days. If we can clear up over this price level, we could easily see this gap fill at least back up to probably 67, 62, because there's not a ton of volume on the volume profile. And these thin areas of volume on the volume profile are very easy for us to move through. It's the bigger areas on the VP that is very hard to move through. So as of right now, it's looking like if AMD can push up over $60, we can really start to move our way up to 64, 66, and 68. However, if we were to break through 55.90, basically $56, that would lead us down to a lower low of about 53, 51, and $50. So these are the levels that I'm currently watching. Now, looking at the bigger time frame, which would be our daily chart, you can see that we're still looking bearish because we are in this downward trend. But one good sign is that as we're making lower lows, same situation is happening with the RSI. The RSI is making higher lows, and the RSI is still very oversold. We're still at 30. In order for us to try to make that move back up, we're going to have to take out this EMA level. You can see that every single time we try to push up through this EMA, we are quickly rejected and it snapped back. This happened 1, 2, 3, now 4 times, and it's looking like if we break that 56 level like we've been talking about on the smaller time frame, that will drive us down to one more lower low, probably at $51, $52. And if the RSI can make a higher low, that could be a good sign to go bullish down at that level. And then hopefully with earnings, we could get that move back up. So I do have some shares in AMD right now. And what I'm probably going to end up doing is some cash secured puts or some put credit spreads. And I want to go over some examples of those with you right now. So this is Webull. I use this, it's one of my smaller accounts, but I do like this to really show people how to trade with options and with spreads. I feel that sometimes using something like Robinhood, which is a lot easier to use, you don't get a better understanding of looking at a real options chain. But if you use something like Thinkorswim, it's really going to deter a lot of beginners because it is a little harder for some people to understand. So one of the first things we're going to talk about is a single option or a cash secured put. So what we're going to be looking at is an expiration date, and we're going to be picking a strike that we think AMD will not close below by a specific date. So I have single, which means we're just looking at one options contract, and I have puts. Now, even though we're in a put position, we're actually going to be bullish on the stock because we're selling that bearish position to somebody who is bearish, meaning we are going to be on the other side and we are going to be bullish. So taking a look at AMD right now, we're trading at 56, and we don't mind buying AMD down around 52, 53, 51. So if we were to go here and we were to look up AMD, you're going to see that something that were to expire next Friday on the 28th, would want to buy at 51, 52, 53. So these are the three strikes that we're currently going to be looking at. If we were to sell a $53 cash secured put on AMD, you would see that we would end up making $98 in premium. So I'm going to right click, I'm going to hit sell, and I'm going to change the quantity to 1. Looking at our order entry here, we are selling a $53 cash secured put on AMD with expirations of next week, and you can see that if we were to hit place order, as long as AMD closes over $53 by next week, we would make a $100 profit. Now, even though this says a max loss of $5,200, that's not correct unless the stock goes to zero. But in a worst case scenario, if it closes below $53, then we are forced to buy 100 shares of AMD at $53. And that's the good thing about using something like Webull. I'm not affiliated with them, but the good thing about it is that they will actually tell you that, listen, if you're trying to do this, you're going to have to buy 100 shares, and that's how you know that you'll be doing it correctly. So if you are looking to do this, please realize that it is going to tie up about $5,200. Now, if you want to go with a safer route, something that you could actually end up doing is going with something a little less aggressive, and you could even sell a 51 put. Now, if you were to sell a 51 put, you can see that you have an 80% chance of profit, because you're going to make money if AMD rips, you're going to make money if AMD sits sideways, and you're going to make money if AMD drops even to 53 or 52. As long as it closes above 51 by next week, you will make money, which means that AMD would have to drop 8% just for you to break even. That's why I love selling cash secured puts so much. And you can see that with this one, if we were to close above 51 by next Friday, and we were to put one order through, you would only make $60 instead of $90, and you'd still have to tie up $5,000. So you would make less money, but you'd have a much higher chance of profit. But here's the thing, guys, doing this each and every single week, not even with AMD specifically, you're still making a 1% return. 1% to some of you guys may not seem like a lot, but if you can make a 1% return compounded week over week, month over month, year over year with nearly an 80% success rate, you will change your life drastically. Now, if you are somebody who does not have $5,000, but you still want to do something similar with AMD because you are bullish, you could do what's called a vertical put credit spread. Instead of going to single, you are going to go to vertical, and you're going to find the price you think it will not close below. So in this instance, let's look at the 53 once again. If we were to sell the 53 put and then buy the 52 put, you can see here that we would end up having to put up much less money. So in this instance, as long as we close above 53, we would end up making $23. And we'd only have to put up $77 instead of $5,000. So you can see that we would risk 77, and as long as it closes above 53 by even a penny, we would make $23, which is about a 34% return. My math is a little off, but it's in the 30s, which is phenomenal. Now, the biggest downside to doing a put credit spread versus a cash secured put is that if it closes below $53, you will lose all of the money you put up. So you will lose all $77. Whereas if you do a normal cash secured put, you will just be forced to buy the shares. And if you're forced to buy the shares in a company you believe in long term, it's really not that big of a deal to somebody like myself. So please remember that if you're doing a put credit spread, you can make a lot of money, but the issue is that your risk is much higher. I hope this video helps, guys. Hit the like button, subscribe, check out our Discord community down below. The link is in the description. You guys will get access to free courses, free live streams, free seminars, free webinars, tons of free content. And if you guys want, you can upgrade while you're over there. And for only $1 a day, you'll get access to all of my trades, all the unusual options activity, all of the phantom prints, all the flow, everything, as well as all of our senior analysts. We've been absolutely killing it over the past couple of weeks, and I would love to have you guys as part of our group. Thanks for all the support. Have a good day, guys. Peace.